Happy New Year, everyone. It's the last day of the 2024 trading session, investing session. We'll see how the year unfolds. I think January is going to be an epic, crazy volatile month. But I want to just share one thing. We've got a special offer going on if you're interested in copying our trades and watching your accounts hit new all-time highs. More or less, we have been absolutely crushing the SP 500 and the 60-40 portfolio. You can see the difference from the last major stock market top before the bear market. We're up 835% versus the buy and hold is only up 150%, and we're crushing the SP 500. So if you want something like that, make sure you go to our website, thetechnicaltraders.com, join our free newsletter. You'll get free downloads, our PDF graphic of all of these cycles, the economic cycle, the stock market cycle, what sectors are hot. You're going to understand the psychology of what most people are going through, potentially you. You're going to know the four stages of how we make money in stage 2, stage 3, stage 4. And of course, you'll also know what type of strategy you should be using during different stages, whether it's an asset investing strategy, an option strategy, long-term investing, or sector trading, all of that. So again, if you want, right now we've got a special offer. If you join before midnight, December 31st, before New Year's, are giving away free gold, a gold back bill, which will ship to you as a member. And also, you can select if you want to have a 30-minute phone call with me. We can have a one-on-one talk the markets, talk life, whatever you want to talk about, and all of that. So make sure you join today if you want to get our signals and copy the trades that thousands of us do around the world and outperform not only the stock market, but can profit from bull and bear markets and all of that. So let's dive into the charts real quick and take a look at what's unfolding today. Overall, I've got our cycle analysis chart across the bottom here telling us where we have a cycle low. Yesterday is forming a little bit of a short-term cycle low. These green bars indicate different cycles. These lime green indicate multiple short-term cycles. Aligning, just a dark green here is just one cycle aligning. So it'll be interesting to see. We had a cycle low here, we had a bounce, we had a cycle low here, we had a bounce, and another cycle low. In the market, as I mentioned yesterday in the afternoon update, the market is very close to ending this trend and starting a new downtrend. It's also very close to rebounding and starting a new leg higher. That could last a couple of weeks. So we just have to wait and see how this market is going to unfold. When we take a look at the big price action we saw yesterday, we saw a big gap down in the markets. Now, gaps tend to get filled, and they don't always have to fill all the way. The most conservative way is we just kind of go into the lows of the previous day. Wherever this gap is, you can see it opened. We saw panic selling in the morning, some more panic selling carrying over, and then once that dissipated, we saw the market rally up and kind of snuggle into the bottom of the previous day's low, and then it kind of stalled out and sold off. So we'll see how things unfold. This looks like it could be a little bull flag, meaning we could see this market pop and push a little bit higher. If we were to just do a baby Fibonacci extension here, we could see that this market could pop to 60.29 on the upside, meaning we see this leg rally up, pull back, the 618, and then move up and potentially carve out a little bit of a bottom. So this would potentially come up and pull back and go to here, and that would give us this kind of resistance area across here. We could argue that this could be a rounding formation unfolding, and then we see a pop starting next year, which is tomorrow, moving higher. And then, of course, I think there's going to be chaos with Trump and Elon and all the changes they want to do. That could bring some uncertainty. And it's generally kind of buy the rumor, sell the news. Trump won. The market has been naturally kind of grinding slightly higher, depending on, obviously, the type of stocks they are. Dividend stocks have been getting hit hard. Energy stocks have been being hit hard because I think a lot of that has to do with Trump in one case, doing oil in North America, and they were way overvalued. We've talked about that. I will cover the energy sector again in another video, but let's look at where money's flowing today. So we're seeing all the indexes trading higher, up about a third to a sixth of a percent. So stocks are moving up. Bonds are trading higher this morning. The dollar is relatively flat, and gold is up a little bit. If we take a look at gold, gold is really just trading sideways. It's been pretty ugly. I've been talking about this for a long time. Gold hit our target and we just ignore it now. I'm neutral to slightly bullish, meaning we're in that phase for gold where it's going to either trade sideways and chop around and hold its value here, give or take within this range, while the stock market does its thing. Even if the stock market sells off, I think gold could still hold its ground and potentially kind of go up and test these highs again. But I don't see it taking off. I think eventually it will have a much bigger correction and unwind. So again, I'm kind of ignoring gold. It hit our target. With the band strategy, we ended up closing our GLD position. We moved out of gold, and I do think it'll have a big correction at some point. If we take a look over at Bitcoin, Bitcoin also had its measured move. It's moved up. We ended up getting into Bitcoin right over here, and we ended up selling it in this upper wick right up here. That was our measured move, and we've seen big selling and it moving lower since. Again, it hit our targets. It hit both of our targets over here, our first target, our second target. We're out. Once 100% measured move has been done, that's when you fall out of love with it. You love it when it's a fresh new move, but once it hits those targets, just, I lock in gains, move on, and wait for a new chart pattern to paint and give us a pattern to take advantage of, or else you just end up holding stuff for a ridiculous amount of time and go through lots of volatility. And who knows, for all we know, that could be a major top and Bitcoin goes to 16,000 again with the next bear market. So there is no point in doing that. And I guess a good way of kind of touching on that is we have our long-term investing strategy here. And you can see, if I draw an arrow, we had the bear market started back over here. This is November 2007, and it didn't give a new buy signal. Oops, if I can get a tool here, until back over here in 2009, midway through 2009. And my point here, and this is the most important part that people don't understand or don't seem to grasp, is once we get a sell signal, we really need to be aware, because if you'll notice, we've had all kinds of these little mini bear market signals with our strategy saying, hey, get out, over and over again. And while, this one worked out very well over here, we got in at a lower price before this bull market that we're in now, but we never know which one of these is going to turn into a multi-year sell-off where you lose half of your wealth in a short period of time. And this one here was a huge 55% more or less pullback and devastating. And it's much better to get out, protect your capital, and just buy back in at a higher level. And because any one of these could turn into a 30 to 50% sell-off. And I believe we're going to have another one of those major financial resets at some point here. And I think it is going to get real ugly and have a big effect and change the world, the economy. I only have this chart loaded to go back 1,500 days, which is why it's weird colored back there. But that's the reality of trading. We never know which one, and it's all about protect our capital, because at some point, one of these will wipe out 20, 30, 40 years of your quality investing or your long-term. You've ridden out the roller coaster ride, and it'll wipe it all out. One mistake, and a lot of people get into a trade and it falls so much, they're like, I can't get out. There's too much damage. I can't lock in those gains. I'm just going to have to hold it and ride it out. Nobody wants to do that. It is a terrible, terrible strategy. It's much better to know when there's a potential trend exit and get out and actively manage positions and take advantage of the falling prices. We can actually make a lot of money in a bear market. And that is when it blows your mind on how exciting chaos can actually be when you're on the right side of it. All right, let's take a look over at energy real quick. Oil, we've got oil flat on the session, pulling back over the last hour and a half or so. Let's just pull this. We've touched on oil several times here. Oil has a little bit of a couple of little cycle low, trying to figure out if it's going to have a bottom. But in the grand scheme of things, oil has been trading down for quite a while. It has been, actually, if I zoom out even more than that, we can see here that oil, geez, it's been going down forever. Let me go way back. Oil has been moving down, and this is the whole energy play that I've been talking about in terms of we've been seeing oil move down and to the right, It is on a major pivot level here that even goes way back like another 10 years, that if prices either stuck underneath it or it's above it. And if it breaks below here, we're probably going down to like 45 bucks a barrel, and it'll be devastating. But look at the price of oil has been going down. It's on the verge of breaking down. And if we look at energy stocks in that same window, they have been doing the exact opposite. They have been going up this entire time. People expecting World War III, people wanting into energy stocks with dividends. We've seen a very big pullback. It's actually broken. The energy space is already broken a bunch of little pivot lows through here. And I think we're going to see energy stocks have another 14 or 15% haircut. They're down about 15%. If this is a high momentum move, this tiny little pause here, we could see another leg down, and that could be like a 30-40% pullback in energy stocks from this high, and continue to get really ugly. And of course, these are a lot of people are in energy stocks because they're dividend paying. People want that passive income, the dividend payments, but it's not really worth it. You can lose either 15 or 30% of your money in a month holding these things, all in exchange. If you hold it for a whole year, you make 4.5% return, 5% return. It's not worth the risk. You lose 10 times as much as you're going to get paid in a dividend, but people don't grasp that. All right, so anyways, I think that's about it. Let's take a look over at bonds real quick here. I know a lot of you have bonds. Let me just get rid of this. Bonds are trying to carve in a little bit of an oversold low. Looks like we're going to get into some more volatility, kind of like this over here. It's oversold, and there's bouts of buying. There's going to be bouts of selling, and I think we're getting close to something where we'll see some type of bounce up, but it might not be anything significant. Just like this one here, dragged out for a very long time, lots of volatility, just chattering, and then finally had a bounce. This could do the same thing. It could be in a big range here and eventually just bounce up to the 50-day moving average, which kind of eventually here. So it could just be a little bit of a bounce or bounce up to this level, which will be right through all of this volume and noise, which if we were to draw a line through here, roughly, I'm just kind of sketching this out. Major low, kind of stuck above it, broke below it, kind of stuck at it, stuck above it, and then broke below it. So there'll be a pretty critical point. There's not a whole lot of upside potential in bonds yet. Just based off yesterday, you're looking at like less than 2%. So I wouldn't get too excited in it. The trend is clearly still down. Lower highs, lower lows, making major, close to major, like multi-year lows again. Anyways, I think that's about it for now, and we'll see how the market unfold and kind of take it one bar at a time. Talk to you soon. Bye-bye.